Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I bring you my weekly update for week 13 of 2021. As every weekend I bring you this update. And the last week I was very busy, and so this is the only video this week, and hopefully next week I will have a little bit more time and then make new analyses for you. Last week I brought you the video about Allstate and came to the conclusion that Allstate looked really cheap with a high discount. And since I already owned Travelers and Progressive Insurance, it was time for me to look at the insurance sector at all. And I also received a lot of comments after my Allstate video, for example from Sam who said he had two other insurance companies with similar PE in Unum and Prudential, and so I came to the conclusion just to make a big comparison, and therefore I built an Excel sheet with all the insurance companies, starting with Allstate, Travelers, Progressive, Prudential, Unum, and MetLife. Just compared all the important numbers I use to analyze companies, starting with the price-earnings ratio, the price-book ratio, dividend yield, revenue growth over the last 5 years, earnings per share growth over the last 5 years, the net margin, the return on investment, return on equity, debt equity, and then finally calculate the intrinsic value and find out how far are the distance to the intrinsic value. And then you see some boxes are red, some are green. I just put in every line in red worst number and in green the best number. And for example, Unum looks very cheap with 5.7 the PE ratio, and also the price book ratio of 0.53. It looks very cheap. And on the other side, Travelers with a PE ratio of 14.3 or Progressive with a price book ratio of 3.38 look relatively expensive. I went through all these numbers and came to the conclusion that Progressive looks very good when it comes to revenue growth. Also, when you look at the net margins, the return on investment and return on equity, really strong numbers, the best in the sector. And Prudential, on the other hand, looks very weak here, and therefore Prudential was out at that point for me, not that interesting. And because they were not profitable lately, it was also very difficult, or for me almost impossible, to calculate an intrinsic value, and therefore they were out very fast. And also Unum was out of the game quite fast because the margins and the returns are just too low for me. And the same is also for MetLife. Also here the margins and returns are quite low, so not that interesting. And finally, of course, I looked at the intrinsic value and I looked who was under the intrinsic value, and then you come again to Allstate, which are traded around 30% under the intrinsic value right now. And on the other hand, Travelers look overvalued. And after I analyzed all these numbers, I came to the following conclusion for me. First of all, I sold my Travelers stocks on Monday for $151.91. And this was overall a very good trade because I was able to buy my Travelers stocks in May 21st, 2020 for $96.30. And so overall, my gain was around 55%. Very good trade, and it seems like it was time to sell Travelers because they looked overvalued right now. And on the other hand, I bought Allstate. I bought also on April 5th 25 shares of Allstate for $117.06. And I for add to my position in Progressive Insurance. Also on Monday, April 5th, I bought 5 more shares for $96.53. And so overall, the pie of my portfolio already looked like that. Allstate now have a share of 2.97% of my portfolio, Progressive of 3.21%, and so overall I have around 6% of my portfolio in insurance companies, plus of course the stake in Berkshire Hathaway, which have also with Geico a big share in the insurance sector. And by the way, if you're new to my channel, you find deeper analyses to all of these companies in my portfolio, and feel free to check this out. May you find some value there, and if so, like these videos, share these videos, subscribe to my channel, and follow me on my road to financial freedom. And after all these moves, the performance of all my stocks look like that since the start of this portfolio at the 2nd of December 2019. Caterpillar is by far the best performer with a gain of 106%, followed by Walt Disney, Facebook, JP Morgan, and so on. And also Progressive and Allstate, my newest positions, are already up in the plus, even if it's just a bit. And so last but not least, a look at the performance of the whole portfolio since the start in December 2019. And since then, the portfolio gained almost 64% compared to the S&P 500 over the same time span with 32.59%. Or in other words, my portfolio outperformed the S&P 500 over this time span over 30%, which is amazing for me. And it will be very interesting to see how this will work out over the long run. And if you want to follow me and want to see how this work out and just get some ideas, investment ideas, then just like this video, share this video, and subscribe to my channel. Thank you. So far, that's it for today. See you the next time with another analysis of another stock. See you then. Take care. Bye bye.